Hey, today I want to talk about IBC and what a case for IBC is. Infinite banking system. That's not what C stands for. Infinite banking. I just read the book. Infinite banking concept. But so what it is in like a really short what these guys figured out is that they could use specific whole life insurance plans to be able to be their own bank, right? So a lot of people have whole life insurance and they just pay into it. The way these plans are structured, you can borrow out of it, you pay interest, but you always get a dividend on it. So, like, let's say instead of I don't know, let's say you're buying a car, right, for 30K and you have that money in your whole life insurance plan. You can buy that car with your money from your life insurance and then pay yourself the interest and it grows and the money that's already in there is gaining a dividend, right? So this is good for really anyone or a business owner. Granted, I'm not selling this. I looked into it a lot and I was going to do it for myself, and in the end I decided not to for a few reasons, and I can kind of go through those. But if you're interested in it, I would say to read this stuff. And then the guy who I was working with, his name is Tom Lowney, Tomlaune, and he's got a bunch of videos explaining the whole thing. So it's really interesting, and you can use it in many different ways for, like I said, yourself or a business, right? There's two different ways, I guess three different ways you can do it. One way was to throw a bulk amount of money into the plan and then pay up your yearly dues or whatever, right? That's what I was looking at. The reason I decided against it was at the time with the income I was earning and everything else, I think I was going to get like $4 million of coverage. That's not money you can use right away, right? So I would have had to put down like $100,000. And this is the main reason that I didn't want to do it, was that $100,000, you dump it in there and you're not able to use it right away for whatever you wanted to use it for, right? Not saying that that's how much I was going to put into it. I'm just using round easy numbers. So that money that I was going to put into it, since I wasn't able to use, I think you got to wait like 7 years, I think. But like I said, this plan might be good for you, but I knew I could make way more of a return and be way better off if I just used that money to invest in real estate than if kind of put it in there, wait the term, only be able to pull this much out for investments. So that's like one way of doing it, right? You put a bulk in. The other way is you get that whatever they say that you're worth, and off of that, then you end up putting like a small amount of money into it every month. But the problem with that is by the time that money grows for you to be able to pull it out, it's going to take years and years, right? So yeah, by the time you're 70 or 80, you have a few $1,000,000. So the only amount of money that you can actually borrow out of the plan is the amount of money you technically put in, up to a certain point. After your plan, because of compound interest and everything else, after so long, the dividends you get exceed the money you have to put in, so it just grows naturally. And that didn't work for me again because, like I said, the first time around, that I could use that money for getting way higher returns on the offset, right? So for me, out of all the research I did, it didn't work out very well, at least right now. Maybe some years down the road, maybe I'll change my mind, but for me, it didn't make sense. I thought that I could invest the money better and, I don't know, just be better with my money. But if you don't have time to invest, this may be something good for you, right? So I would say to look into it and check it out and see if it's something that fits what your needs are. It's just not something that fit kind of what I was looking for. And that's Lucy. Hi, Lucy. She's a good puppy. She sleeps a lot. But yeah, so it's a good book. I think they recommended like 2 other books that these guys, what's his name? Nelson Nash. I think he wrote some other books about pretty much just being your own bank, right? So this is what this whole idea is about. Instead of paying interest to the bank, you pay yourself the interest and you grow your wealth. So it's a good idea, and I think it works, but I think it also depends a lot on what your end goals are. So give this book a read, check it out, and if you've read any interesting books on business or anything else, let me know in the comments, because I'm looking for another book.